Let me come to the news at hand. We just heard from the government with regards to the levy of an import duty. Of course, they've also, on the other hand, reduced some customs duties. But I think the big impact one will be the levy of the export duty, rather. Could you talk us through what the implications will be, and then I'll get into some more specifics on
Sure. I think we fully understand the compulsions.
Sure.
With the pressure on inflation, RBI has had to act and the government has had to act, right? So to that extent, we appreciate the compulsions.
Yes.
It hurts us, but we appreciate the compulsions. Secondly, it creates a situation where obviously domestic prices will mirror international prices closer than it did in the past. Uh, Now, the key question is how long will this be there, this export duty? Because in the medium to long term, I believe India has a great opportunity to be a big exporter of steel. Because the countries who've traditionally been big exporters are China, Japan, Korea. They're all moving away from export markets, and rightly so. India has the raw materials. Russia and Ukraine, which has the raw materials like India, are also out of the export markets. So it's a 100 to 150 million ton opportunity for India as a potential steel exporter, which we should not miss, because steel is produced in some of the poorest states in the country using minerals which are available in those states. So I'm okay in the short term to deal with inflationary concerns, but in the medium to long term, I think exports should be a very important part of a steel production strategy.
Sure, I understand that. And again, we get the government rationale, so not disputing that in any way. But when announcements of this nature come in, it becomes difficult for any industry to plan things like capacity, right?
Yeah.
Because you don't know what the life of something like this will be,
Yeah.
when it will be taken off, will it get perpetuated? What immediate impact would it have for, let's say, capacity planning for companies like yours? For instance, I know you were planning to hopeful of doubling capacity from the current 20 million
Yeah.
tons.
Yeah.
Now, and I think almost 10 to 15% of that was supposed to be for the export market.
That's right.
Are
Yeah.
you rethinking that strategy?
So obviously, what we are planning just now, the capex which is ongoing, will continue because we are completing projects like the Kalinganagar expansion.
Correct.
So I think that doesn't get affected. The longer term planning will obviously depend on the longer term approach to exports, because even when you look at 40 million tons of capacity, we assume 10 to 15% will be exported. So that's about 4 5 million tons. Now, if you're closing out export markets, then the question is you will pace your expansion as fast as the domestic demand grows. If domestic demand grows very strongly, good for us. If it doesn't, then we'll have to plan capacity expansion accordingly. But I hope that this export tax is more a short-term measure to deal with inflation and not a longer-term strategic call.
Okay. In the near term, and since you're going to, if you move some of this export material to the domestic market, what is the hit that you would take in terms of pricing? What were you expecting in the international markets? Because again, this depends on whether you're selling spot, contract. So I'm not clear on what the specific hit would be.
So I think just now there's a lot of panic in the market. Whether it's not just the steel companies, but the people in the value chain. Customers are not sure, should they buy now or should they wait for steel prices to drop further. So there's a little bit of a brain freeze going on, if I can say that.
Fair enough.
Yeah. So there's not much transaction happening just now. The price is trying to find its own level. It had anyway softened from the beginning of the month, because honestly, when we started this quarter, we had expected coking coal prices to be over 600. It's at 510, 515, which is still too high, but lower than what we had thought.
Okay.
So steel prices were also settling to reflect lower coking coal prices than we had thought in March. So I think that finding that balance has got a bit disturbed because of this export tax. So we are still waiting to find that level at which transactions will happen
But
in India.
approximately where instinctively?
Well,
do you
I think
it'll
it's
settle?
already maybe 7 to 8,000 rupees lower than what it was last month this time.
Okay.
Okay, so
Just within the span of few
yeah,
days.
I mean in the last few days it's probably 2 3,000 rupees lower. But if I look at the last 2 3 weeks, because it's also reflecting international prices, coal prices, etc. Export tax only accelerated that journey. But at some point in time, we'll find a balance, because honestly, the exports is also only about 10% or 15% of the volume. And for most steel companies, anyway, June volumes were not being exported much. So there's an impact in May exports, where many steel companies are having to pay this 15% to customers overseas to honor contracts. But some of that volumes from June onwards will come back into the domestic market. So I think 7 to 8,000 rupees is what I'm seeing just now from what it was.
But if the real volume comes into the domestic market only in June, then that's when we start seeing even sharper hit to domestic prices. Right?
Well, the flip side is demand may come back, because there was a
In
concern.
June pre-monsoon.
No, because a lot of the demand, the feedback we had was demand was getting delayed because of high commodity prices. So if people have been postponing purchases saying commodity prices are high, then hopefully they'll come back when commodity prices are low.
So how do you sort of how do you tell your investors what all of this is going to mean for the quarter?
We'll wait till the end of the quarter when we talk to the investors. But yes, investors get worried when they see this kind of fluctuation, and which is reflected in the share prices of all steel companies.
Any immediate capacity expansion that you're likely to shelve on account of this?
No, no,
Not
no,
nothing
no, no,
immediate.
no.
Okay.
Yeah.
So what we're looking at as a worst case scenario, let's say for companies like yours, I'm sure you won't give me numbers, is sort of a bottom line hit for this particular quarter,
Yeah.
and then we'll see if the export tax continues into next subsequent
Yeah.
quarters, right?
So I think the way I would put it is yes, it's a speed breaker on a journey, but I think there's also sometimes a feeling that oh, the sector is now going into a bad cycle. I don't think we are anywhere near that.
And the bottom line hit, Mr. Narendran, can't be more than 10 to 15% because that is the quantum of your exports, right?
No, but
So I can
no,
I
what
can just do
happens?
simple math on this and
No, I wish
and
it
so
was
yeah.
that simple. But the issue is what's happening is while this is impacting directly 10 to 15%, it's impacting indirectly the balance 85%. The question that you asked,
In
what are
terms of
domestic pricings?
prices, yeah.
Yeah, right. So
Okay.
I think that's where the impact is. But I think it will fluctuate a bit and then find its own level. Like I said, demand has got postponed, it will come back because fundamentals are still very strong. So if they're saying that infrastructure projects were put on hold because of high commodity prices, hopefully they will come back now.